Good afternoon, investors, and welcome to KleverStock. My name is Wan Izul, and I'll be serving you the latest market updates from this morning up until now on the Midday Roundup. We kick it off with Bursa Malaysia updates. So the Malaysian stock market saw a strong recovery on Tuesday morning, with the benchmark FBM-KLCI jumping 10.68 points to 1,684.85 at the opening bell. Now, this bounce allowed the index to recoup a portion of the significant losses suffered during Monday's frantic sell-off, which was triggered by fears of a prolonged war in the Middle East and soaring energy costs. Market sentiment shifted after the US President Donald Trump suggested that the conflict with Iran could be nearing its conclusion. Following his assurances that Iranian forces would struggle to sustain the fight, Brent crude oil prices, which had flirted with the $120 per barrel mark, moderated to approximately $98, 96 cents per barrel. Now, this cooling of energy prices provided much needed relief to global equity markets, leading to a rebound on Wall Street that echoed across Asian bourses. Now, the regional recovery was widespread, with South Korea's Kospi surging nearly 6% and Japan's Nikkei 225 gaining over 3% in early trade. However, local analysts remain watchful. Malacca Securities Research expressed a note of caution, suggesting that relief or any relief rally might be temporary, given the unpredictable nature of geopolitical statements and the volatility of the current administration's policies. Now, despite the underlying caution, investors moved quickly to pick up undervalued shares. The banking sector led the charge on the FBM-KLCI, with major players like Maybank, CIMB, and RHB seeing notable gains. Other heavyweights included Tenaga Nasional and Nestle, also attracting bargain hunters looking to capitalize on recent price drops. Now, in the aviation sector, companies sensitive to fuel costs saw a sharp reversal in fortunes. AirAsia X and its sister company Capital A both traded higher as the drop in crude prices eased concerns over rising operating expenses. Now, while the market has shown resilience today, the primary focus for investors remain the sustainability of the current ceasefire rhetoric and its long-term impact on global supply chains. Moving on to our local currency and foreign exchange, the Malaysian ringgit opened on a stronger footing against the US dollar this Tuesday morning, and that was buoyed by a recovery in global risk sentiment despite persistent geopolitical concerns. Now, around 8 a.m. this morning, the local currency appreciated to 3.9420 or 3.9605. That's against the US dollar, a notable improvement from Monday's closing rate of 3.9590 or 3.9655. Now, this upward momentum follows a period of significant volatility. Dr. Muhammad Afzanidam Abdul Rashid, the chief economist at Bank Muamalat Malaysia Berhad, he attributed the shift to a rebound in US equity markets and the cooling of energy prices. Brent crude retreated below the $100 per barrel mark after President Donald Trump signaled that the conflict in Iran could potentially reach a swift resolution. While the markets reacted positively to the news, Dr. Muhammad Afzanidam remained cautious about the long-term outlook. He noted that it remains to be seen how sustainable such promises are, but equities rallied nonetheless. He also added that discussions among G7 nations regarding the release of strategic oil reserves have further influenced market dynamics by highlighting global concerns over the war's economic impact. Now, the ringgit's recovery comes after a challenging Monday session, where it closed 0.36% lower at 3.9623, and that was pressured by a robust US dollar index, which held firm at 99.175 points. Now, The Economist suggested that while the dip in oil prices provides temporary relief for the currency, The transition of power in Iran may complicate the geopolitical landscape. Hafsanizam said Iran has installed a new supreme leader and a hardline stance on the war is likely to be maintained. Consequently, he expects the ringgit to navigate a relatively narrow trading range throughout the day as investors weigh these conflicting signals. Now, in broader currency markets, the ringgit showed a mixed performance. It gained ground against the Japanese yen, rising to 2.4967 or 2.5086, but it faced pressure from the British pound and the euro, slipping to 5.2910 and 4.5786 respectively. Regionally, the local note found support against the Singapore dollar, Indonesian rupiah and the Philippine peso, though it experienced a slight depreciation against the Thai baht. Now for some economic news. Global commodity markets experienced a day of extreme volatility on Monday as the conflict between the US, Israel and Iran sent energy prices surging before a late session reversal. Brent crude futures initially skyrocketed by nearly 29%, reaching their highest level since mid-2022 as major Middle Eastern producers cut supplies amid fears of shipping disruptions in the Strait of Hormuz. However, prices eventually pared gains to settle up 6.8% at $98.96 a barrel, following signals from Washington that the conflict could be nearing an end. The market jitters were intensified early in the day by news from Tehran, where Mojtaba Khamenei was named successor to Supreme Leader Ali Khamenei. Analysts viewed the move as a sign that hardliners would maintain control, heightening fears of a prolonged standoff. Tony Sycamore, a market analyst at IG, noted that the violent reaction in prices stemmed from investors seeing no obvious off-ramp in the high-stakes confrontation. Sycamore warned in a note to clients that the risk of more lasting economic damage continues to build by the day, highlighting the fragility of global supply chains under the current geopolitical pressure. Now, the surge in energy costs sent shockwaves through other sectors. In agricultural markets, Malaysian palm oil jumped by 9%, and Chicago soybean oil hit its highest level since late 2022, driven by the use of biofuel feedstocks. Industrial metals such also felt the impact, with aluminium hitting a 4-year peak of $3,544 per ton on the London Metal Exchange due to acute supply concerns. Now, despite the chaos, gold prices fell more than 1%. The decline was attributed to a strengthening US dollar and rising treasury yields. Now, as investors bet that high energy prices would fuel inflation and force the Federal Reserve to delay interest rate cuts. Now, the dollar's rally eventually slowed after President Trump suggested the war was very complete, providing a temporary reprieve for global equities. Now, the late-day retreat in oil prices was further accelerated by reports that the Trump administration might consider easing sanctions on Russian oil to stabilize global energy costs. Now, while the immediate panic has subsided, the roller coaster trading session underscores a market that remains hypersensitive to every development in the Middle East, with traders remaining cautious about the sustainability of the current cooling trend. Continuing with corporate news updates, QL Resources Berhad is positioned to maintain a trajectory of steady long-term growth supported by the resilient nature of its core staple food operations and a strategic expansion into value-added protein production. According to a recent report by MBSB Research, the group's diversified portfolio provides a solid defensive buffer against market volatility. Now, despite this positive long-term outlook, the research house has adopted a measured view of the company's immediate prospects, citing the current complexities in the operating environment. Reflecting this stance, MBSB Research reiterated its neutral rating on the conglomerate, maintaining a target price of 4 ringgit 28 cents. Now, this valuation is derived from a 10-year multi-stage discounted cash flow model utilizing a weighted average cost of capital of 7.2%. Now, analysts believe that while the company is fundamentally sound, the stock's near-term performance will likely be capped by prevailing headwinds in specific divisions. In the integrated livestock farming sector, the research house anticipates a period of stabilization. Now, MBSB Research, they also noted that earnings should stabilize as feed cost trends remain manageable and egg prices gradually recover across Malaysia, Indonesia and Vietnam, adding that these factors would also help mitigate the financial pressures resulting from the removal of government subsidies. Now, simultaneously, the marine products manufacturing division is expected to act as a key earnings driver, benefiting from robust contributions in aquaculture and surimi production, despite fluctuating regional input costs. Now, the group's convenience store business, headlined by the Family Mart franchise, is also on a recovery path as tourism-related footfall increases and the company continues its nationwide store expansion. However, the report warned that competitive intensity and cost pressures remain the key headwinds for the segment. Furthermore, the palm oil and clean energy division may see improved performance due to better fresh fruit bunch yields, even as clean energy contributions normalize following a slowdown in new solar projects post Net Energy Metering 3.0 beyond operational updates. Now, QL Resources has successfully moved to resolve a protracted legal battle. Now, through its wholly owned subsidiary QL Oil Sdn Berhad, the group has entered into a settlement agreement with Hang Ting Limited and PT Citra Perkasa. Now, the deal effectively terminates joint venture agreements related to the Indonesian plantation venture, whereby PT Pipit Mutiara Indah and also brings an end to all arbitration and litigation proceedings that have been ongoing since 2021. We'll now go for a short break, but don't go away. When we return shortly, we'll have some more corporate news updates and developments for you. And welcome back to the Midday Roundup. Let's continue with some more news updates. Now, just 10 days into a joint military operation against Iran, a clear rift has opened between President Donald Trump and Prime Minister Benjamin Netanyahu. While Israel is prepared for a long-term conflict to permanently weaken the Iranian government, Trump is facing intense pressure at home to end the fighting quickly. Now, this shift comes as American public support for the war hits record lows and surging oil prices threaten the US economy. On Monday, Trump claimed the war was pretty much over, contradicting earlier promises of a weeks-long campaign. US officials have expressed concern over the severity of Israeli strikes, which recently left Tehran covered in thick black smoke after fuel depots were targeted. Even longtime war supporters like Senator Lindsey Graham have urged Israel to be cautious, arguing that the US goal should be to help the Iranian people without destroying their future infrastructure. Now, the divide is also fueled by a changing political landscape in America. A recent poll shows that 53% of Americans now oppose military action in Iran, and for the first time, more Americans sympathize with Palestinians than Israelis following the destruction in Gaza. High-profile Democrats have also begun openly questioning the level of US aid provided to Israel. Experts suggest that despite Netanyahu's desire to keep the pressure on, he is ultimately beholden to Washington. Aaron David Miller, a veteran Middle East negotiator, noted that Trump holds unprecedented leverage over the Israeli leader. If the US president decides to pull the plug on the operation to protect his political standing or the economy, Israel will have little choice but to follow suit, regardless of whether they feel their mission is complete. Up next, we have some business updates. Malakoff Corporation Berhad has announced that its wholly owned subsidiary, Prai Power Sdn Berhad, has successfully secured a 4-year extension to its Power Purchase Agreement or PPA with Tenaga Nasional Berhad (TNB). Now, this new agreement ensures the continued operation of the Prai power plant through March 31st, 2030, with the extension officially taking effect on April 1st, 2026. The decision to extend the contract follows a series of previous agreements, including the plant's original 21-year term, which concluded in mid-2024, and a subsequent 1-year interim extension set to end in August 2025. Now, Malakoff noted that this latest commitment from the national utility giant reflects a strong level of confidence in the facility's long-term performance and its ability to maintain operational stability within the national grid. According to a filing with Bursa Malaysia on Monday, the PPA defines the specific rights and responsibilities of both Malakoff and TNB regarding the generation and sale of electricity. Now, crucially, the contract mandates that Prai Power Plant must consistently make its generating capacity available to TNB to meet the country's energy demands. The extension provides Malakoff with a clearer revenue outlook for its subsidiary over the next several years as the Malaysian energy sector navigates shifting demand and infrastructure requirements. Now, this move also reinforces the Prai Power Plant's role as a reliable contributor to the local power supply despite its aging original contract cycle. Finally, wrapping it up with some major corporate developments and deals across Malaysia. Here are the headlines. Now, strong institutional appetite. The offering has secured 20 cornerstone investors, including major names like AIA, Eastspring Investments, and JP Morgan Asset Management, who have committed to roughly 97.5% of the institutional tranche. And number 2, the valuation benchmarks. At the 1 ringgit 45 cents price point, Sunway Healthcare will command a market capitalization of approximately 16.7 billion ringgit. Now, this makes it the second largest listed healthcare provider in the country, trailing only IHH Healthcare. Now, Malacca Securities has assigned also a fair value of 1 ringgit 51 cents, suggesting a modest 4.1% upside from the IPO price. Analysts from the group's defensive growth profile, bolstered by a 42% surge in 2024 net profits and an aggressive expansion plan to reach 3,400 beds by 2032. Up next, demand among retail investors have been notably high. Some local brokerages reported that their IPO financing quotas were fully utilized within days of the prospectus launch. And number 5, to manage potential post-listing volatility, Maybank Investment Bank has been appointed as the stabilizing manager with the authority to purchase up to 15% of the IPO shares. That's a wrap for the Midday Roundup with me, Wanizal, on KleverStock. Thank you so much, investors, for choosing us. Hope you have a wonderful week ahead and stay tuned for upcoming live stream programs. Have a wonderful day.